Good evening and welcome to the Strategy of the Week presentation for Friday, October 28th, 2011. Once again, my name is Jerry D'Ambrosio, and tonight's Strategy of the Week is titled Seeing is Believing. VectorVest has been timing the market with accuracy and precision for over 20 years, and the key to making consistent profits in stocks is to master the fine art of buying low and selling high. We have never claimed to predict the market, no one can, and if they tell you they can, they're probably lying to you. VectorVest has a series of market timing indicators that allow us to identify trends as well as key turning points. And I'm going to spend the first part of this presentation showing you how it's done. Let's jump right into the program and get started. Now, every night we publish a newsletter that keeps our clients up to speed on what's going on with the market every single day. So that's where I'm going to start. I'm going to come up to our main toolbar, click on Views, and you notice I've taken the views to October 4th. Which was the actual bottom of this market. And the strategy section, or the guidance on this day, read, concerns over Greece's debt sent stock prices lower in early trading today. However, comments from Fed Chairman Ben Bernanke that the central bank may take more steps to stimulate the economy, along reports that European officials were working on a plan to help the struggling European banks, sparked a late afternoon rally, causing stock prices to finish the choppy trading session sharply higher. With 3 yellow lights and a down situation, the guidance for prudent investors, and in parentheses it says this could be what we have been waiting for, should get their shopping list ready and buy selected stocks tomorrow if the market is moving sharply higher after 10 a.m. and aggressive investors and traders should play the market up or down with a bias to the upside. And if I scroll down a little bit, we can see the 5 best strategies on October 4th were all bullish. So why would Dr. Dolito say to buy stocks in a down situation? Well, the key to this sentence here is sharply higher. Let's take a look at a market timing graph. I'm going to come up to our main toolbar, click on Graphs, change our graph here from a stock graph to a market timing graph. Now what we're looking at here is the price of the VectorVest composite, or the overall market in candlesticks, and the indicator below is the market timing indicator. Now the MTI identifies the underlying or long-term trend of the market. I'm going to change this from a 1-year graph to a 6-month graph. I want you to focus on the 2 low points of October 4th and August 9th. We can clearly see, if I draw a line, that the October 4th low is lower than the August 9th low. Now take a look at the values of the market timing indicator at both of these lows. On August 9th, the MTI was at 0.39, and on October 4th, the MTI was at 0.43. So as the market established a lower low, the MTI established a higher low. Now, this is a classic bullish divergence, which is a phenomenon that doesn't happen very often, maybe once or twice a year, but when it does, it usually results in an explosive rally. And this isn't the first time that this has happened. I'm going to go back to a 5-year graph, and more specifically to the bottom of 2009, and I'm going to zoom in right at that bottom. We can see that the actual low on 3/6 is lower than the low on November 21st, but the MTI on March 6th hit a higher low of 0.31. The value of the MTI back on November 21st was 0.20. Now if I take off the MTI, which identifies the underlying trend of the market, and put on the relative timing of the VectorVest composite, which identifies the short-term trend, we can see the same pattern here. And off of this March 6th low, our most aggressive timing system, the primary wave, actually turned up the very next day on March 10th. So is it just dumb luck that we happen to get our clients back into the market within a day or two of the actual bottom? Of course not. It's because we have a market timing system here that works, and a newsletter that relays this information to you. I said earlier in my opening remarks that market timing is the key to buying low and selling high, and now you can clearly see that here. And if it's not clear yet, I'm going to change us to a 10-year graph. I'm going to open up our graph just a little bit, maybe a few months, and I'm going to zoom in on the 2002 low points. We'll notice that here on October 10th, market established a lower low than on July 24th. But what did the RT do? RT established a higher low. If I take off RT, put the market timing indicator on, MTI on October 10th, closed at 0.46, and on July 24th, closed at 0.34. And you can see time and time again the explosiveness of these rallies. I'm going to change us back to a 6-month graph to the current situation, and we can see this has been a tremendous rally. Now, is this bullish divergence just occurring with the MTI? Well, let's see. If I come up to add parameter, go to technical analysis, and add the relative strength index, which is a great technical indicator that identifies overbought or oversold conditions, and check the RSI and uncheck MTI, we can see same pattern happening with this indicator. Now, the stock market is a battle between the bulls and the bears. When the market rises, the bulls are in control and more people are buying stocks. When the market falls, the bears are in control and more people are selling. What this pattern is telling me here is that the bears are getting tired. They're losing control of this downturn, which again usually results in a very explosive rally. It results in the bulls taking complete control and stocks start to soar. So you shouldn't get so distraught every time the market falls, because after it stops falling, and it eventually does, and then starts to rise again, it provides a tremendous buying opportunity for good stocks at discount prices. Now, we don't expect everybody to be able to identify situations like this. That's why reading the VectorVest views every single day is so important. If I go back to the views, on March 6th of 2009, this is what the strategy section read. It said the price of the VectorVest composite has now fallen 8 of the last 9 weeks, and at $14.68 per share, it is down $4.65 or 24% from its January 6th high of 1933. It has now fallen below the bear market low of $15.42 set on November 20th of 2008. We need to go all the way back to March 12th of 2003 to find our next support level of $13.91. While looking at the all-daily view of the market timing graph, note the similarity between the 723.02 and the 10.902 pair of low points to the 1120.08 and the 3609 low points. Also note the similarity between bullish price, MTI divergence of each of these pairs. If history repeats itself, we will soon have a bear market rally which will peter out, then the bulls will stampede again. Folks, this guidance was given to you on the actual bottom of March 6th. And if you don't read this newsletter every night, you may miss some very important information. So now that I've gone through the when to buy part, we need to know what to buy. And every day we give you the top strategies in our real-time Derby tool over the last day and over the last 5 days, so that's a great place to start. Now, there's nothing wrong with going into our stock viewer and buying our top VST stocks when the market is rising, but there is tremendous opportunity for monster gains using these Derby searches off of market bottoms. If I change our date here back to October 4th of this year, we can see that on this day, those top Derby strategies were all bullish. Jailbreak, Silver Singles, VST Mighty Mites, Finding Firework Stocks, and Blyer's Bottom Feeders. So what I did was I ran some quick sims using these Derby searches from that market bottom on 10/4. And here are those 5 searches from the views on October 4th. We can see we're grouped by the name of the strategy. If I open up Blyer's Bottom Feeders, we can see we have a number of different runs. Now, a quick sim is going to run the top 10 stocks from one specified date to the other. Now, maybe you didn't get in on the 5th, on that next up day, or maybe you still weren't confident on the 6th, or the 7th, or the 8th, and so on. So I ran some quick variators and varied it by the start date. We can see we had a start date of October 4th with a gain on Blyer's Bottom Feeders of 43.81%. That's from the 4th to the 27th. From the 5th to the 27th, up 32.98%. From the 6th to the 27th, up about 19%. So this goes to show that if you missed the first signal or even the second signal, it didn't matter when you got in. If I scroll down, we can take a look at all the runs from Blyer's Bottom Feeders. The average was 17.83% with 90% winners, and not one of these runs lost money. So it didn't matter when you got into this rally. With this strategy, you made money. The next strategy was Finding Firework Stocks. This actually didn't perform that well. If I open that up, we can see we had one losing run there with an average gain of only 3.49%. Next was Jailbreak. Not one of the runs lost money, and we had an average here of about 17% with 87% winners. Next was silver singles from 10.4 to 10.27, up 41.5%. From 10.5, up 24%. From the actual primary wave up signal date on the 6th, it was up 22.5%, almost 16% on the next day. And with this strategy, you only had one losing run with an average of 11.62% with close to 80% winners. And then finally, VST Mighty Mites didn't lose money at all here, and you had an average gain of 19.51% with 94% winners. So on average, all of these 5 strategies, you had an average gain of almost 14% with 83% winners. So it is easy to tell you from October 6th, which was the primary wave up, till now, how did these strategies do? But some are a little bit more prudent and conservative than others, and they're not going to jump into the market at the first sign of an uptrend. They may wait a few more days, and this just goes to show that it hasn't mattered which day you entered in. Now, on the next day, October 5th, there were 3 different strategies in the views. And if I come up to Derby searches for 10.5, those 3 different strategies were AC's percent price poppers, RTA sending, bottoms up, and Russell 2000. AC's percent price poppers had a couple of losing runs here, but on average, up 14.5% with 83% winners. Bottoms up didn't have a losing run at all, on average, up about 17%. And then the Russell 2000/RT only had one losing run and an average of 14.64%. I mentioned before that a quick test takes the top 10 stocks for each of these runs, but it probably wouldn't be the smartest thing to jump into 10 stocks all at once. So the last thing I want to show you is our VectorVest 7 backtester. Now you can see here that I ran some tests using those same strategies, but instead of buying all 10 stocks at once, I legged in buying 3 stocks per day until 10 stocks are filled. I also used a very prudent stop criteria. I used a 15% trailing stop. And the highlighted strategy here is VST Mighty Mites. We can see our equity curve at the bottom. If I click on Edit, just to show you some of the settings that I used, I didn't use any market timing because, again, we started on October 6th, and we've been off and running since. Automation rules, I used VST Mighty Mites as my search. I used a 15% trailing stop. I did automatically replace closed positions, but again, I did leg in here. I opened 3 positions per day until 10 positions are reached. And because we didn't want to buy back the same stock we just sold, if I scroll down, you can see I didn't repurchase the same stock for at least 5 days after the sale. And I used the same settings here for each one of these strategies. I didn't use a different stop criteria or different money management rules. If I click on cancel, Russell 2000/RT made 28.5% with only a 6% drawdown, 73% winners. Bottoms up did about 27% with 81% winners. Jailbreak about 21. S&P 400 midcap, that was actually a strategy from the views on the day of the 6th, the day the primary wave first turned up, so I wanted to test that as well. Flyers bottom feeders and so on. And these results right here, folks, are practical. You're not jumping in with 10 stocks. You're not using no stop criteria. You're being very prudent about getting back into the market by buying only 3 stocks a day until you fill out with a 10 stock portfolio. So I hope you take a few things away from this presentation. I hope you now understand how important it is to read the VectorVest views every day, because Dr. DeLito will give you insights on the market that nobody else can give you. And these buying opportunities of a lifetime, like what we're going through now, what we went through back in March of 2009, don't come around very often. But as long as you keep up with reading the VectorVest views every day, you will never miss another one. Well, this concludes tonight's Strategy of the Week presentation. Have a great evening.